Ah, a cement company? How boring and unexciting, you may say. If you believe going forward there will be more growth in Sarawak, then make sure you watch this video till the end. I will also be addressing some rumors lingering around these counters. CMSB is Sarawak's largest and most prominent cement manufacturer. It has a dominant position in Sarawak cement market. It operates two cement plants in the state, namely Kuching plant, which serves the southern region of Sarawak, and Bintulu plant, which serves the northern region. CMSB is involved in all aspects of cement production, including clinker production, cement manufacturing, and distribution. It is heavily involved in supplying cement for Sarawak infrastructure projects, particularly those under Sarawak Corridors of Renewable Energy, or in short SCORE, and Pan-Borneo Highway. Here let me touch a bit about what is SCORE. It stands for Sarawak Corridor Renewable Energy and was established way back in 2008, and it is one of the 5 economic development corridors in Malaysia founded to stimulate investment-led growth in rural areas. SCORE covers more than 100 km or 80% of Sarawak's land area, with the aim to uplift the livelihood of the communities from the central to the northern region of Sarawak. SCORE is the catalyst that bridges the urban-rural income gap through its impactful socio-economic programs that promote entrepreneurship and upskilling, as well as downstream value-added products and services. The infrastructure projects and socio-economic development programs implemented in the SCORE region are in line with the advancement of biomass, green technology, and the digital economy in tandem with the Sarawak Green Economy Agenda and the Post-COVID-19 Development Strategy, or in short PCDS 2030, to foster sustainable growth. On the other hand, on the 1st November this year, it was reported that Pan-Borneo Highway has since achieved 99.5% completion, with the remaining work concentrated in Sarike, Beluru, and Lambir section, which are expected to be completed by end of this year, 2024. On the 26th November, CMSB reported its third quarter financial year 2024 earnings result, where its core net profit, excluding an unrealized foreign exchange loss of RM 74.9 million, almost tripled to RM 60.6 million, despite a 0.7% year-over-year drop in revenue to RM 299.9 million, mainly due to improved gross profit margins from its cements and oil tools division. The cumulative 9-month financial year 2024 core net profit was above expectation after rising 72.7% year-over-year to RM 117.7 million. So that you know, Cahya Mata Sarawak Berhad, or in short CMSB, operates through several divisions, reflecting its diverse business portfolio. As of recent report by MIDF, under its cement division, cement revenue was almost unchanged at RM 172.8 million, which was a decline of 2.5% year-over-year during the quarter, while profit before tax jumped 22.1% year-over-year to RM 37.9 billion. The stronger bottom line was on the back of lower imported clinker prices and improved efficiency. Clinker is a key intermediate product in cement manufacturing. It is a granular material formed by heating a mixture of raw materials, primarily limestone and clay, in a cement kiln at very high temperatures, about 1004 to 1005 degrees Celsius. And this process, called calcination, causes chemical reactions that transform the raw material into a fused, solid mass called clinker. Next, under its oil tool division, the Group Oil Tools division posted a stronger 9-month financial year 2024 revenue of an increase of 4% year-over-year to RM 219.3 million, delivering an improved 45% year-over-year 9-month financial year 2024 profit before tax of RM 37.5 billion. Led by the strong performance and improvement in margins in its operation in the UAE and Indonesia. Next comes its Constructions and Road Maintenance division. It recorded an increase of 66.9% year-over-year increase in profit before tax to RM 3.4 million, led by higher revenue from road maintenance, third-party and instructed work. Its property development division, though, remained in the red with a loss before tax of RM 1.2 million due to a slower sales of property. The strategic investment and support services division also suffered a loss before tax of RM 427,000 and a loss of RM 281,000 respectively. And last but not least, its phosphate division. This division has yet to generate any revenue as it has yet to achieve commercialization level and it continued to incur losses, which almost doubled to RM 84.9 million. A huge chunk of this, though, was from an unrealized foreign exchange loss of RM 74.9 million due to a revaluation of shareholder loans to Cahya Phosphate. A cement company, how boring and unexciting, you may say. On the 22nd November this year, we saw an announcement which outlined the plan of Sarawak government to secure RM 100 billion in investment over the next 5 years from year 2025 to 2030, primarily for strategic development to bolster the state's economy. If you believe going forward there will be more growth in Sarawak, which equals more construction, this means more cement will be used. As a leading supplier of cements and construction materials in Sarawak, CMSB enjoy a strong market presence and brand recognition. This local dominance will provide CMSB with a stable revenue base and customer loyalty in the region. Moreover, CMSB has well-established relationship with the Sarawak state government, which is crucial for securing major infrastructure and development projects. This relationship bolsters its bidding success for government contracts and facilitate regulatory compliance. To me, I am buying into CMSB stock as a pure play on the future economic growth in Sarawak. This is also the reason why, when CMSB chart has broken from its bullish ascending chart pattern, I chose not to exit from this trade. Instead, I decided to average down. I added my position at around RM1.18, which also served as a first support level. Look at how previously at this level of support, this stock rebounded. If market weakness continued to persist and the first support failed, the next strong support will be at around 95 to 96 cents. One of the most important reasons I feel safe adding at these prices because I know that the intrinsic value for CMSB for worst case scenario is around RM1.38. Compared to the current market price of RM1.18, it is undervalued by around 15%. And conversely, its base case intrinsic value is RM1.60. For the benefit of those who may be asking, what is intrinsic value? Stock intrinsic value is the real worth of a company stock based on its financial performance and health. Instead of looking at stock's current market price, which can change and fluctuate due to people's opinions and emotions, intrinsic value helps us to understand if a stock is truly a good deal or not. By focusing on the company's actual financial strength, like its earnings and debts, we can make a better decision about which stocks to buy and when. A word of caution here. During my first episode on CMSB stock, I recall there was a subscriber who commented that this stock has internal family feud and is speculated to be the next Serba Dynamic stock. Some horrid fact findings about Serba Dynamic to share with you here. Serba Dynamic Holdings Berhad, once a prominent player in the Malaysia's oil and gas industry, faced a dramatic downfall due to corporate governance issues and financial irregularities. The crisis began in May 2021 when its external auditor, KPMG, raised concerns about contracts and transactions amounting to RM 3.5 billion, which could not be verified. This triggered a change of events, including lawsuits against auditors, delayed financial reports, and resignations of board members. The company was classified under Practice Note 17 or PN17 in January 2022, indicating financial distress. Serba Dynamic shares were suspended multiple times and finally delisted from Bursa Malaysia in June 2024 after the dismissal of its final appeal. I find that this should serve as a cautionary tale for all of us, be it investors and stakeholders alike. So I did some digging on CMSB and found that indeed there were news reported about internal family feuds involving Cahya Mata Sarawak Berhad, or in short CMSB, which is closely associated with the Taib family. Reports suggest disputes over shareholdings and management decisions within the family. For example, the transfer of shares from the estate of Laila Taib, who is the late wife of Abdul Taib Mahmud, Sarawak's former governor, to his second wife, Ragat Taib, has been contentious. Some of the Taib children have contested this transfer, citing violations of Laila's will. This situation has raised questions about governance and alleged preferential treatment within CMSB. Additionally, there have been incidents involving CMSB leadership too. For instance, a whistleblower's allegations of conflicts of interest within the company led to temporary board reshuffles, only for these decisions to be reversed later on. This has further fueled speculation about internal disagreements among family members involved in the company's operation. So now, my next question: will CMSB stand to become like the next Sabre Dynamic stock? Comparing Cahya Mata Sarawak Berhad, or CMSB, to Sabre Dynamic in terms of stock performance and challenges requires careful context. CMSB faces unique challenges, including internal family disputes and operational adjustments, as seen in its recent corporate developments and financial results. Its performance has been impacted by currency fluctuations and a reported loss before tax in Q3 2024 due to unrealized forex losses, though some of these losses could reverse in the future. On the other hand, Sabre Dynamic's downfall was driven by governance issues, legal challenges, and audit concerns, leading to a significant loss of investors' confidence. CMSB has not been embroiled in similar controversies to date. However, market sentiments towards CMSB remain cautious due to reduced revenue forecasts and ongoing organizational shift. This also explains the lack of performance on CMSB stock price of late. One of the key things we could do is to monitor CMSB's management actions, upcoming financial results, and market trend before drawing parallels to Sabre Dynamic. So far, when I take a look at CMSB's latest solvency position, I like what I'm seeing. It has a 62% solvency score after taking into account all information on CMSB, such as how easily CMSB can pay interest on its outstanding debts, how much cash it has, the amount of debt, and more, and consolidate it into one single number, that is the solvency score. The higher the solvency score, the more solvent the company is. Besides that, for me, even though I have bought into CMSB stock, I always practice position sizing. Means I only allocated small portion of my total capital into each trade, which max is up to 10% per trade only. So if, touch wood, CMSB did turn out to be like the next Sabre Dynamic, and in the worst case scenario, it is a sum of money I can afford to lose. While these risks are significant, I do believe with CMSB's dominant positions in Sarawak's construction sectors and involvement in large infrastructure projects, this could help to stabilize its prospect if managed effectively. Finally, please do not buy into this stock just because I have bought into it. I know the risk I am taking here, and I am able to navigate the risk in each trade. So if you plan to buy into CMSB stock, do know about the extra baggage that comes with it, and please do your own due diligence too. Last but not least, what is your thoughts on CMSB counter? Feel free to share your comment with us here. We have now come to the end of my sharing for today. If you liked today's content, do smash onto the like button below to let me know. So long, and I shall see you again in my next video. Bye.